As of the market close on Friday, July 31, 2026, SMX Security Matters plc trades at exactly $15.04 per share, holding completely flat in after-hours trading following a session where it swung between a daily low of $14.54 and a daily high of $16.30 on relatively light trading volume. When traders log into their individual brokerage accounts or scroll through retail trading feeds on the Robinhood app, a price point hovering around $15 might give the illusion of a stable, mid-priced technology equity. However, that $15 headline price hides one of the most violent, jaw-dropping, destructive balance sheet stories on the public exchanges today. Behind that price tag sits a trail of massive reverse stock splits, severe equity dilution, and a cumulative long-term drawdown exceeding 99.9%. The core expectation among speculative retail investors on popular investing sites is that SMX represents a high-potential micro-cap ground floor opportunity in supply chain verification and anti-counterfeiting technology. The reality, however, is that this company has repeatedly used capital restructurings to stay listed on the NASDAQ while burning through tens of millions in net losses, leaving those seeking reliable investment help facing extreme downside volatility. Understanding the price action of SMX Security Matters requires peeling back the mechanical curtain of micro-cap market mechanics. When you check ticker quotes on the Interactive Brokers trading platform or review technical charts via Fidelity Wealth Management tools, you see a stock that has experienced staggering single-day percentage spikes mixed with catastrophic multi-month declines. In recent sessions, daily volume has fluctuated wildly, often dropping to just tens of thousands of shares traded per day, which creates immense liquidity risk. In low-float scenarios like this, even small institutional orders or retail buying waves can launch the stock upward by double-digit percentages within minutes. But just as quickly, severe selling pressure resumes as the broader market digests the underlying financial fundamentals. Earlier this year, management executed multiple reverse stock splits, including a 1-for-20 split followed closely by another ratio adjustment, simply to push the nominal share price back above minimum NASDAQ compliance thresholds. For anyone practicing self-investing through SoFi Active Investing or Standard Fidelity IRAs, seeing a stock trade at $15 after a series of reverse splits means the split-adjusted historical high is effectively in the hundreds of thousands of dollars, illustrating the massive loss of capital experienced by long-term holders. This dynamic creates a profound disconnect between short-term momentum traders and fundamental online investing strategists. While day traders on the Robinhood stock trading platform often hunt for SMX due to its low float and explosive volatility potential, long-term investors looking for stable online investing assets view the company's financial metrics with extreme caution. Over the past 12 months, the stock has carved out a 52-week range extending from a low of $12.51 all the way to astronomical split-adjusted highs. The institutional footprint on the stock remains remarkably light, as big money asset managers using Fidelity Brokerage or high-end Interactive Brokers account solutions generally steer clear of companies burdened by persistent net losses and negative return on equity. Instead, trading activity in SMX is heavily driven by retail sentiment, momentum algorithms, and short coverage bursts. Every time the stock attempts a trend reversal, overhead supply from previous capital raises and convertible notes caps the upside, forcing the stock back into consolidation. Comment below how many shares of SMX Security Matters you currently hold in your portfolio, or if you prefer to completely avoid microcaps that rely on frequent reverse stock splits to maintain exchange compliance. To grasp why the market treats SMX with such intense skepticism despite its grand promises, one must look closely at its operational business model and core technology offerings. Founded to solve the global crisis of product counterfeiting and supply chain opacity, SMX Security Matters provides invisible chemical and molecular marking systems coupled with digital tracking software. Their process embeds proprietary invisible markers into raw materials, whether solid, liquid, or gas. These physical markers are designed to withstand manufacturing processes like melting, refining, or recycling. When read by custom optical or electronic detectors, the embedded data connects directly to a blockchain digital platform, creating what the company calls a digital twin of the physical asset. This allows manufacturers, brand owners, and regulatory bodies to verify the origin, authenticity, and ethical sourcing of materials, ranging from precious metals and luxury garments to recycled plastics and industrial crude oil. On paper, the target market is massive, spanning global sustainability compliance, circular economic tracking, and brand protection. However, the expectation that an innovative technological product automatically leads to a profitable business has repeatedly collided with commercial reality. SMX has struggled to generate meaningful top-line revenue needed to offset its massive operating overhead and research expenditures. In recent financial statements, the company reported substantial net losses running into tens of millions of dollars, alongside negative gross profit margins and heavy cash burn rates. To keep the lights on and finance operations, management has relied heavily on continuous equity offerings, debt issuances, and private placements. While tech behemoths like Apple stock or Nvidia stock generate tens of billions in free cash flow to fund innovation and buy back shares, microcaps like SMX are forced to dilute existing shareholders continuously. When an investor adds SMX to an intelligent portfolio or an individual brokerage account, they are taking on the risk of structural dilution, where the company repeatedly issues new shares at steep discounts just to maintain working capital. When you compare this trajectory with high-flying market leaders like Tesla stock, the contrast in capital efficiency becomes glaringly obvious. Capital allocation strategies in high-growth technology require a clear bridge from pilot projects to commercial scale. In the case of SMX, while they have secured strategic partnerships and proof-of-concept agreements across Europe and Asia for tracing recycled plastics and luxury goods, converting those pilots into predictable, high-margin enterprise recurring revenue has proven exceptionally difficult. Market participants using Robinhood crypto features or SoFi stocks tools are accustomed to high risk, but even speculative capital demands a visible pathway to profitability. Without sustained revenue growth, every commercial update or corporate press release is eventually overshadowed by the pressing need for additional financing. Looking ahead into the future outlook, the narrative surrounding SMX Security Matters rests squarely on whether regulatory mandates can force global supply chains to adopt molecular tracing technology. Emerging circular economic regulations, particularly in the European Union and North America, require strict verification of recycled content in plastics and transparent tracking of supply chain carbon footprints. If legal frameworks mandate verifiable origin tracking, SMX could theoretically see a surge in demand for its physical-to-digital authentication suite. That regulatory tailwind represents the ultimate bullish catalyst that long-term speculators point to when analyzing the stock on platforms like Interactive Brokers Stock Trading or SoFi Robo-Advisor hubs. Conversely, the downside risks remain severe and immediate. If commercial adoption remains sluggish and the company continues to run at a steep net loss, further dilution or future reverse splits remain distinct possibilities. Traders monitoring Interactive Brokers fees and execution tools know that holding a volatile microcap through corporate restructuring cycles can lead to permanent capital impairment. Furthermore, competition in supply chain tracking is intensifying rapidly, with alternative solutions utilizing standard QR codes, RFID tags, and advanced synthetic DNA markers competing directly for enterprise budgets.
Whether you manage investments through Schwab Intelligent Portfolios, execute daily trades on the Fidelity mobile app, or build a custom basket using Robinhood fractional shares, evaluating SMX requires separating short-term trading momentum from long-term corporate viability. The financial expectation painted by optimistic market commentary often focuses purely on the vast addressable market of circular economic tracing, but the stark reality reflected in the financial statements is a company fighting to achieve sustainable revenue while dealing with significant capital structure friction. For traders using the Robinhood cash management feature or checking quotes on SoFi Invest, SMX remains a highly speculative instrument best approached with strict risk management, precise position sizing, and a clear understanding that technical spikes in low-float stocks can reverse just as fast as they appear. In summary, SMX Security Matters presents a striking example of the gap between narrative expectation and operational reality. While its molecular marking technology and blockchain tracking platform address genuine global supply chain challenges, its historical stock performance has been dominated by extreme volatility, financial losses, and repeated share